I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike, and Happy New Year.
Oh, thank you. It's been an interesting couple weeks since we last talked, and I think that means next year is going to be even more interesting. I mean, last week or since then, the bottom fell on the market, but now we're bouncing the past 2 days, and people are excited about that.
Sure. So the Dow setting records in both directions. What does that tell us?
Well, if you want to know, go back and look at the last time that happened, and you're looking at bear market situations. The volatility increases during bear markets, and you get big down days and big up days, and the biggest such days in history are during bear markets. And in 2017, we saw record low stock market volatility. The Dow didn't even go up or down more than 1%, more than twice in a single day, all throughout 2017. In fact, it was the lowest volatility going back over 100 years, and that started to change in February when we first took a big hit. And now, you know, over the course of the past few months, we've rolled over. We've broken the lows set in February, had a huge dump in December, almost a 10% drop. In fact, Monday was the worst day of trading for a Christmas Eve session ever, followed by the biggest single point day in the Dow ever. But I just think what we're really seeing right now is a counter trend bounce, a relief bounce, which is nice. I'm glad it's happening for people, really. But it's going to, I believe, peter out. This market's not going straight back up to the highs set in September without months and months of consolidation. That's the best case scenario. And the danger, which I think is really a 90% chance, is really we're just going to go sideways here and then break down again through the lows of December sometime in 2019, probably in February or March, and have another leg down. But regardless, we're kind of in a pause right now, giving people some relief from the selling that's happened. However, I think what people really should be doing is focusing on the things that have actually been going up while the market's been dropping, and think about putting their money in those situations. I think that's where the real opportunities are to make money, and not just holding on to stocks that are broken, that are in big trouble, such as Nvidia, Facebook, Apple, and on and on and on, the most popular stocks that people in the United States own. And no one's talking about the winners, which the best performing sector in the entire U.S. stock market since the peak of September is gold stocks, mining stocks, followed by utility stocks, and these are defensive sectors.
We'll have more with Mike Swanson to talk about those right after this.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Mike Swanson. Mike, I know in the past you've said utilities are a safe play because no matter what, people need to heat their houses and keep the lights on. Is that still going to be the case? And no matter what, people are going to pay those bills.
Yeah, that's what's happening and why money is flocking into that sector. I'm looking, for example, at Duke Energy, and it was at 80 at the very end of September, and it went up to 91 in this month, in December, as we close it out. You know, that's more than a 10% gain, while the U.S. stock market's fallen. But the real big reason utilities go up is one of the things we've seen happen is we are reaching the end of the interest rate hiking cycle. I know Trump has made headlines by saying the Fed is raising rates too quickly, and that's capturing people's attention here in the American media. But the reality is that the yield curve is flattened, and the bond market itself is not forecasting any more interest rate hikes in 2019. And that when you reach the end of an interest rate hiking cycle, people in the market start to think, well, at some point now we're going to see interest rates go down, and that makes stocks that pay dividends more attractive to buy. So that's the real big reason money is flowing into utility stocks, because they pay high dividends. They're stable dividends. You know, people aren't going to stop using electricity, as you point out. And this is something that tends to happen when the U.S. stock market tips into a bear market, when you have the last interest rate hike. This happened, in fact, in March, April of 2000. There's a huge shift into utility stocks, in those 2 months, right when the U.S. stock market topped out. And so I think the same thing's happening. This is a major cycle change. And I also think that's why gold is starting to perform better than the U.S. stock market too. And these are the type of things I think people really, if they want to buy stocks, this is what they should focus on. Because I think when we look back, and we're talking a year from now about what's happened in 2019 and so forth, these will be the stories of where the winners are, whereas the Facebooks, the Amazons, yeah, they can bounce here, because the stock market does look like it can go up a little bit into next month, because it did get so oversold. But these are bounces. And if you want to play a bounce, you got to be willing to sell the bounce and get out, or you're just going to ride things back down all over again. That's a tough game. I don't really like to play it. You got to really be a nimble trader. You got to compete against trading robots, and it's tough. And I give credit to people who can play that game. But if you want to get involved in those stocks, you got to realize that's a game you got to be playing and play it. I just rather do these easier situations and buy gold stocks, buy gold, buy silver, because I think it can go up steadily month by month, and I don't have to worry about jumping out for some, collapse or something before a collapse happens.
Well, yes, with the Christmas break and so on, and people not paying attention, silver over $15, and it had been in $14 silver forever.
Yeah, and I think that's just a sign of what is to come. Right now, silver does have some resistance at $15.50, but probably $14.50 or $14.75 is now going to be a solid support level. That was the resistance it broke through. And some of the silver stocks, and such as wheat and precious metals, which I own, I should disclose that, it was at $15 at the start of December, and as we're speaking, it's at $19.50. That's a huge return. I can't think of any of the big cap tech stocks that have gone up that much during that period of time. They've been going down. But the thing about the mining stocks, I should note, is we're just at the start, I believe, of another big move. And when the moves are in the early part, it tends to be the big cap miners, the large producers that move up first, the things such as Wheaton. And at the moment, there are still lots of junior mining stocks, exploration stocks that are lagging. They're not popping up as much yet. But that's really typical, and they tend to go up a few months later. So, for example, in 2016, when that last move happened, the majors took off around February, but a lot of the juniors didn't really go up until gold went to 1350, and probably that's going to happen again next year. Gold's not above 1300 yet, but once it gets above that or 1350, I think then we'll start to see the money flow into the junior mining stocks. So if people think, well, I missed the move in Wheaton, it is up so much, and I'm kind of scared to buy something up so much in such a short amount of time, get a watch list of the juniors, the more speculative stocks that haven't moved yet. Some of them also are facing tax loss selling that happens at the end of the year in December if they're not up for the year. And when you have that tax loss selling trend, typically that ends when the new year comes, and then the stocks start to go up in January. So there's lots of exciting things for people to make a watch list, buy, get involved in now in this space. I do stock market trading, traditional, buy these ETFs, but frankly, I'm doing more short selling when it comes to the U.S. stocks than buying them. I mean, these stocks are just cratering, and I'm going long in the mining sector.
We'll have more with Mike Swanson right after the break.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Mike Swanson. Mike, do you have any outlook on oil right now, or is it a disaster story right now?
Well, it's been a disaster, and it's funny because on Monday, oil fell 7% in a single day, and the week before it fell 7% in a single day. So that's the pace of the selling in oil, and it got down to $42.50. And it was just over $75 in September. So it has fallen with the U.S. stock market. However, it has fallen a lot. I don't think it's made its ultimate bottom, but it's not going to zero. And, one more drop to 42, it can be at 35 or 30 and make a bottom down there. So I don't think it's bottomed. I think the energy stocks will end up going lower. However, that said, I think they're going to be great buys at some point next year. And I'm personally planning on buying energy stocks at some point next year. They pay big dividends, and there's two things people should keep in mind. First of all, the commodities tend to move in a cycle in which gold and silver go up first, which I think is what we've seen start, and then soft commodities end up following them, such as corn, wheat, sugar, these type of things. And then energy goes up last. So there's sort of an order to the way the commodities come alive. And that would mean that we should see the soft commodities go up, and they haven't done it yet, but go up like gold and silver, go through recent resistance levels. And then later, and I think it'll be towards the end of next year, I think we'll see oil turn around. And that would mean to me that most likely it'll be sometime in the second half of next year that'll be the time to buy these energy stocks. But it'll be a wonderful buying opportunity. You know, everyone in the United States is obsessed with their Apples and their Facebooks and these stocks, and I don't think they're coming back for a very long time. I think all we're going to see is bounces for years in them. But the oil stocks is a different story, and they will turn around. And not only that, you can get big dividends. Right now, Exxon's paying about a 6% dividend, but that dividend might be 10% by the end of next year. So those are things when the time is right, you'll be able to buy, invest, and hold maybe forever from that buy point and get these massive dividends. And that's something I'm really looking forward to in 2019 when that moment comes.
Are there any other sectors you think will be the right place to be?
Well, I'll mention two others. And again, I don't think the time is right yet, but I think it will be a time next year. And they're not sectors, but entire countries. And the first is Russia. And two reasons for that. One, you can rank all the global markets by valuation. If you look at the cyclically adjusted P/E ratio, and Russia's one of the cheapest markets in the world, where the U.S. has a cap ratio of 21, Russia's is around 6. And it's super low, super cheap, but Russia is very closely linked to the energy markets. So it's probably going to bottom out and turn around for good when oil does, but I think it'll be a great opportunity. You can buy the Russian ETF RSX or some of the individual Russian stocks, and I'll probably be looking to do both next year. And so I think it's going to be a fantastic buy. And the next one I'll mention is Turkey. We saw Turkey crash in August, of course, and their currency was devalued by 50%. And I think their market's probably bottoming out. I don't think it's ready to turn around, and it might get dragged down a little bit on the next leg down when the U.S. stock market happens. But I think it'll bottom out ahead of the U.S. stock market, and because it's crashed and because their currency is collapsed, it's cheap relative to Canadian dollars and U.S. dollars. It also has a cyclically adjusted P around 8, among the cheapest markets in the world. So I think it's like call it a vulture situation where you're buying things that have collapsed, and no one else wants to buy them, a sort of, a value investing type play. But it'll probably be, I don't think it's now, sometime next year. But you also have the same situation where there's individual stocks in Turkey that trade in the U.S., their ADRs that are paying 8% and 10% dividends. Because of what's happened in that market. So I think that's going to also be a great opportunity for next year at some point too.
So a little Russian dressing with your turkey.
Yeah, that's a good way to put it, and sprinkle some gold dust on top. And I think that'll be a great recipe next year.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. Happy New Year, by the way, Mike.
Yeah, you too, and to your listeners. They're wonderful people. You got one of the smartest audiences out there. That's why one of the reasons I look forward to talking with your audience. So they understand, the contrarian investing concepts, and being in the United States, it's not like that now. Everyone is so obsessed with Apple and Facebook. It's incredible.
We were speaking with Mike Swanson, again, editor of WallStreetWindow.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. If you have questions for Mike or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Best of the season.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.